just let me promo this. So guys, Tina and I talk all the time. I've got BitcoinTina here. I had been riffing a little bit about Planb's work and stock to flow. I want you all to know I'm a huge fan of Planb's work, and the co-integration model breakdown was news to me, and it was worthy of contemplation. I started to outwardly think about the breakdown of the model, or what I perceived to be a breakdown of the model. And Tina reached out to me, and in the spirit of what Tina does, went for the juggler and said, "You're seeing it wrong, Jason." So I said, "Hey, let's get on the phone and talk." So Tina, hit me with the disclaimers.
Okay. So first of all, I'm not a financial analyst. This is not financial advice. These are my own personal opinions. Do not invest on this basis. Do your own research. You're at your own risk. This is my point of view, and it's nothing more than my opinion. And do whatever you like, but don't blame me for it. It's my own view.
Right. I love that. And Tina, I share
a disclaimer, but,
yeah,
but I'm not responsible for what you do.
Right. And let me say one other thing. I'm a big fan of Tina before we talked. And I've grown to appreciate your powerful, precise approach to things. And again, I appreciate your time.
No, I all I do is think about Bitcoin, and I'm extremely interested in it. And I think Bitcoin is the most important thing in the world today. I really do. I think that our freedom in the world depends on Bitcoin. And I believe that Bitcoin will become the one and only money. And I think this happens shockingly fast speed for what most people in the rest of the world would consider shockingly fast speed. 1 second.
Yeah, no worries. And after our last discussion, Tina, I was even more red-pilled than I thought I could be, thinking about some of the things that you talk about. I really do love some of the points that you made. And I share your feelings around Bitcoin and its use case as money, and not being so concerned about layer 2 and layer 3, et cetera. Right now just holding Bitcoin is fine with me.
Let me rephrase, let me put that in a slightly different response. It's not that I don't care about it. I keep giving credit to C.K. Snarks, Christian Corollas, who's Bitcoin Magazine, who used the phrase that this is hyper-Bitcoinization. Hyper-Bitcoinization started when Satoshi dropped the white paper. This is a process. This is not an end point. I think we are watching an asset being monetized. Goods are used as money. That doesn't mean that Bitcoin is ready yet to be used as money. It's a process. And along the way in the process, it's going to become more and more valuable along the way. And there'll be a lot of development. I think a lot of people will make comments and critiques that, oh, well, this can't be used as money because of these various failings. And to me, that's somewhat like looking at a star linebacker in his crib months or hours after he was born and say, my God, he'll never play in the Super Bowl. Look at him. He's only 19 inches long. No, you're right. He's not going to play in the Super Bowl later this week.
Right.
That doesn't mean that he won't be the Heisman Trophy winner. Hold on, my dogs.
Oh, yeah, sounds like
can you hear that?
Yeah. Go get them.
There's hold. Let's see if we can do something about this.
No worries. Yeah. So again, for those tuning in, this is Going Parabolic, another episode with BitcoinTina. Hopefully, we're going to touch on Tina's view of Bitcoin and his views on stock to flow, Planb's model, co-integration. These are highly technical terms. He's also thrown out power law in some of our discussions. I hope he expands on that. Again, I'm not one to try to recall my schooling in statistics and economics. I certainly took the classes. It was a long time ago. So if we need to, we'll just pull out the damn dictionary and go through this stuff because it's important.
I'm not an expert in statistics or power laws either, and I don't pass myself off as such an expert. What I think I'm an expert in is common sense and trying to use my brain and trying to understand something. I am not going to wow you or dazzle you with mathematical models. I was a solid math student, but no star. I'm not a quantitative analyst. I don't pretend to be one, play one on TV, play one on YouTube or anywhere else. My understanding comes from my observation of the world and my trying to understand why I think Bitcoin's incredibly valuable. I actually don't quite remember when I first came across Planb, but I had already, in my own mental model of understanding Bitcoin, was telling people that I thought Bitcoin could be between $200,000 and $400,000 sometime in the next cycle, which was really based in the next halving cycle. It is based imprecisely. I guess what bothers me so much is that people are now, first they're celebrating Planb, and there are many people who did not like the idea of stock to flow for various reasons, and didn't like his model and don't like his model for various reasons. But he was celebrated by some, and now some people are just dumping on him, which really annoys the crap out of me.
Yep.
Because number one, I liked his model, but I thought it really fit with my view of the world. Anyway, so accepting his model was really no problem for me. I didn't particularly care about co-integration one way or the other. I don't know what the necessary statistical tests are for co-integration. I never heard of co-integration before it was mentioned with regard to this model. I don't know anything about co-integration, and I don't care a hoot about co-integration. It doesn't impact or affect my view on Bitcoin or its value or how fast I think all of this happens. But my views are not precise dates. I never liked the idea that Planb said, well, it has to meet this by a certain date at a certain price, otherwise it fails. It's at $100,000 by the end of December 2021. So, I mean, for me, if it reached $55,000 by December 21 and reached $100,000 by June 2022, I would say, my God, what a catastrophic failure. I mean, that just seems completely ridiculous to me. I'm reminded of something that I heard somebody say a long time ago. The attribution may not be perfect. I have to find it. It's better to be approximately right than exactly wrong. It said that a version of these words came from an 18th century author named Carveth Reed in a book on logic and reasoning. Yeah, it is better to be approximately right than precisely wrong. And my understanding on stock to flow, I think, is correct. I think that people have tremendous problems with it. I also want to give another quote. I know Jason loves to quote Einstein lately. He likes to quote Einstein on compound interest. Well, I'm going to give you another quote from Einstein, which I think is equally important. And that is, Einstein said, not everything that can be counted counts, and not everything that counts can be counted. And I think stock to flow and co-integration and all these things kind of fall into that latter category of, I think it counts. Not sure if it can be counted. I don't know that I can prove this to you. I certainly don't have the math skills to prove it to you. But even if I did have the math skills, I still don't know if I could prove it to you. And you know what? I don't care.
Yeah.
I don't care if you understand it, if you don't understand it, if you agree with it, if you don't agree with it. I think the character in Nassim Taleb's book, Anti-Fragile, is, I think his name is Fat Tony. And he says something to the effect that, and I'm going to get this wrong, so please don't berate me for getting it wrong. I know what I think, and I know what I believe, and pretty much that's all that matters. I don't care what you believe. I know what I believe, what I understand, and it's it's sort of a trading mentality or an investing mentality. I don't know if I can explain it to you in a way that you're going to like, or that a math professor will like, and given a written up proof of proving it. And some people are incredibly precise in how they use some of these things. That doesn't mean they make any money with investing. Somebody
point.
said to me a while ago with regard to Bitcoin that the easier all this stuff gets, the higher the price is going to be. I pretty much agree with that.
Yep.
I know I probably could not have mined Bitcoin in the early years. I wouldn't have really figured it out or understood it. Didn't know it was out there. I first heard about it in 2014. Thought it was interesting and didn't do anything about it. Didn't pay attention to it. Didn't pay attention to it. So the price going up, and I had a newsletter which was following it, and I said, "Oh my God, look at this! This was really interesting. Let me start looking into this and get to know it and understand it." For me, I think we talk about stock to flow, but I haven't heard anybody discuss this. So let me read something to you. I just found this today. I have not done my due diligence adequately. I've not read all of Satoshi's emails and forum posts, and I probably should have, and I probably will at some point because I found it really interesting. Mm-hmm. But I don't actually think those things matter for me, because I don't care what he thought about it, because it doesn't matter what he thought about it. What matters is what I think about it, as long as I understand what Bitcoin is. It doesn't really at this point matter what Satoshi thought. At least it doesn't matter to me. It doesn't impact my investment view, whether he thought one way or thought another. Let me read this. It's kind of interesting.
Please.
And this is from November 28th, 2008. And he says, I'm going to come into the middle of a paragraph. I'll read the whole paragraph, but the first part doesn't matter to me. As computers get faster and the total computing power applied to creating Bitcoins increases, the difficulty increases proportionately to keep the total new production constant. Thus, it is known in advance how many new Bitcoins will be created every year in the future. The fact that new coins are produced means the money supply increases at a planned amount, but this does not necessarily result in inflation. If the supply of money increases at the same rate as the number of people using it increases, price remains stable. If it does not increase as fast as demand, there will be a deflation, and early holders of money will see its value increase. I know people talk about stock to flow, but I never hear anybody saying, what if we were continually issuing a constant rate of 50 Bitcoin reward? What if we doubled the amount of the reward every year? And so that it was basically this constant increase. Excuse me.
So where Tina left off is it's actually changing the algorithmic distribution of Bitcoin from being a
Did I turn off my mic? I turned off my mic. Where did I leave off? Now?
You had just started to contemplate Bitcoin changing the halving economics to actually increasing its distribution every year.
So I read Satoshi's part, right?
That's correct.
I'm completely incompetent with a microphone.
That's okay.
So, what would things have looked like if you started off with 50 Bitcoin issuance, and then after the first year, I think you would have had 2.6 million Bitcoin approximately, and then we stayed at 50, and then you would have had you would have doubled that, and then it would have been 5.25 million Bitcoin. Now, what if you kept doubling that? So instead, you then issued the next year another 5 million Bitcoin and kept doubling that. So if you had a different issuance and distribution model, would Bitcoin have ever established any value at all? Or you had a high inflation rate? And I don't think it would have had. I don't think it ever would have bootstrapped. I'm not sure that anybody would have paid anything.
No one would have been
Bitcoin.
interested. No one would have been interested. We already have that monetary system per se.
Well, no, but it's not just that. I just think it would have been seen as just a fun, quirky electronic game toy,
Sure.
and not much of anything else. Gamers might have wanted to use it or play with it because it might have been interesting and fun, and it might not have it might barely have attracted any audience whatsoever.
Right.
And nobody ever discusses, they like to come down on stock to flow. Stock to flow is completely meaningless. It has nothing to do with the value of Bitcoin. And yet, why don't we ever hear anybody ask that question in an inverted way? And I think if we want to understand stock to flow, we have to ask that question. What if the issuance looked very much different? And I think that having a fixed supply did enable people to understand the process of hyper-Bitcoinization and the process of monetizing an asset. Then when I look to the issuance itself, again, I'm no expert on Satoshi. I'm not an expert on proof of work. I don't want to pass myself off as saying that I understand all the ins and outs of this. I don't. But I don't think you could have had I don't think you could have Bitcoin without issuance. If you just mined all the Bitcoin all at once, then miners wouldn't have secured the network. So you had to have some kind of issuance in order for this thing to work. So I think actually stock to flow was designed into Bitcoin. I think stock to flow is an intrinsic part of Bitcoin. And I don't know if Satoshi understood that as being necessary to monetizing an asset, or if he didn't, and he just understood it as a computer scientist necessary to creating Bitcoin.
I mean, Satoshi, Tina, Satoshi could have been a gold bug. And stock to flow,
I'm not saying that he couldn't. I'm just saying I don't know why he did it.
But stock to flow, as I understand it, is something that gold bugs have used.
It's an observation of one of gold's qualities, that on the planet Earth, that we have only so much production relative to the existing stock. And humans have never seen real-time live the monetization of any asset. This is the first time we've ever actually seen this. The money that we use as currency is not really money, it's currency. And it's basically credit, because issuance of cash, for instance, physical cash, is based on
faith.
Physical currency paper that's issued against a portion of the Federal Reserve's balance sheet. If we had a constant doubling of the currency in circulation, probably cash might not have any value either. It would look like Venezuela. People just throw bills on the ground, not want to use them or hold them. And that's not money. Money's a good, and I don't want to go into that. That's a discussion I think we had.
Yep.
Last time.
Yep.
So what's interesting is that in the very, very early part of the issuance, starting with the 50 Bitcoin reward for the first 210,000 blocks, after the first year, you basically have a stock to flow which is less than 1. And at some point along that way, at the end of the second year, now you have a stock to flow which is basically 2 to 1, because you now have, at the end of the second year, you have 5.25 million Bitcoin outstanding. And now you're going to go about and issue another 2.6 million. And so the inverse of that is a stock of 5.2 divided by the 2.6. So you have a 2 to 1. And you start seeing stock to flow occur. Well, you had it before. You had it earlier than that, but it's under 2 and under 1 initially, because the flow is so. Is that right? Actually, or is it over 1? I got to do the math on that. My math's not great on this. I'd have to actually think about it. I didn't write it down and I didn't go through it. So I don't want to make that statement. I might be wrong about that. I have to actually go through the numbers. I only started looking at it when it became 2. So I'd actually have to go look at that. And I'm not that fast on my feet. Went from 2, 3, 4, jumps to 10, approximately. And so we're seeing that stock to flow express itself early on. And you see in the pricing, it establishes a price of under a penny sometime, I think, in 2010, early 2011. And then you see it start to really accelerate in that process in those very early years. You can look at Bitcoin averages and see, at what price it was at what dates. I don't know where they get the data from. But it seems obvious to me that this is an important part of the process of monetization. Now, some will critique stock to flow and say that since we know what it is, it has to be included in the price, which I really think is probably wrong. Again, it's something I can't prove. It's something that I think I understand. And we can come back to that in a bit. But in order for something to be a money, it has to have the necessary monetary characteristics. And there's no point in going into that. And then I think that constriction in new issuance becomes very important. One example I like to give is secondary stock offerings. And if an investment bank just issued new stock for a company where there was already existing stock, that would tend to have a negative impact on the price. And that's really how I see stock to flow, that new issuance of the asset itself weighs on the price. What's interesting about a monetary asset versus a non-monetary good is that we consume non-monetary goods. So when we use the best asset used as money isn't consumed by its use. So we found historically before Bitcoin, so let's talk about before Bitcoin, prisoners in prison might use cigarettes as money, but that's not as good a money as gold is. We consume cigarettes, we smoke them, we use them. The stock to flow characteristics in a prison may be good, but that's an artificial constraint. You could easily mess up those stock to flow characteristics by having the warden and the guards dump a lot of cigarettes into the marketplace and completely wreck whatever market has been created, because it's an artificial constraint. It's not a real constraint. Silver is somewhat used in its use. Silver oxidizes, and as a result, to a certain extent, goes away. Most things that we've used as money are, other than gold, are consumed by their use. And they're not as good a money as gold has been, although gold failed as a money. It was not really useful past a certain point because gold could not be easily transacted beyond an arm's length transaction, literally an arm's length transaction. So we started using banks, in my opinion. Bitcoin is different from that. It's not consumed at all by its use. So having new issuance, to me, really damages that price. Now, I think I read Nassim Taleb's book, Anti-Fragile, and he talks about things which are fragile, things which are anti-fragile, and he discusses power laws. And I found the idea of power laws really interesting. And so he gives an example of jumping off a 30-foot house, a 30-foot, jumping off something 30 feet in the air and landing 30 feet. And that's not the same as jumping off a stool, which is 1 foot high, 30 times. There is a power law relationship in the impact on your body. I can't explain it to you. I don't understand the math, but I know it's true. You know it's true. I saw a video of a man knocking dominoes down, and there is a relationship there. There's a reason for the relationship, but that's not what's interesting to me. He started off with a very tiny little domino, which weighed maybe under an ounce or a fraction of an ounce. And then ultimately 13 dominoes later was knocking down a domino that was 100 pounds. So you couldn't imagine a domino which was an ounce knocking down a domino which is 100 pounds. That seems absurd, but there is that power law relationship in the way that works. And so it knocks down one which is 1.5 times the size, and 1.5 times the size, and 1.5 times the size. And I forget what he said. It would have been, I think the domino would have been 29 dominoes down. The National Weather Service has issued and we see these power law relationships in a lot of places. You may have some examples yourself, Jason, of things which are power law relationships. Any comments on that?
Yeah, I mean, look, I think it's an easy thing to understand that one quantity varies as a power of another, and you can play that out in many different scenarios. Take me though to its specific effect as you relate it to Bitcoin.
Okay, so for me, I think of price as being fragile. We often think of price as being fragile, but I think Bitcoin's price is actually fragile to the upside more than it's fragile to the downside. Because once you understand the qualities that's Bitcoin, you start to understand why you want to own it, because of its censorship resistance, because of its limited supply. But there are a lot of reasons why, and we're not going to go into why you want to own Bitcoin right now. I think I'm talking mostly to Bitcoiners. Yep. And if you're not a Bitcoiner yet, then you can watch some other things and come back to this. We're not looking to rehash all of Bitcoin. That new issuance, as I was saying, is damaging to that new supply. You have to find new, fresh cash buyers in the system. Now, of course, we have typical supply-demand dynamics, but whenever we're dealing with any kind of financial asset like a stock or like Bitcoin, it's usually an existing amount which is being passed from one person to another. And stocks are not monetary assets, actually. Money, there's no revenues associated with Bitcoin. It just has the qualities that it has, just like gold. Gold is a non-revenue generating thing. It just sits there. It doesn't do anything but sit there. And yet we think that it has value. And it does have value because we give it value because of its qualities and its characteristics. One of those is the amount of issuance. If gold were issued in an amount that every year the supply doubled, I doubt that gold would be a monetary asset either. Mm-hmm. So that new issuance, I think, damages price. And I don't know how to prove that to you. I'm going to ask you a question as a weightlifter in a second. Yep. Because I'm curious to know your answer. And when that supply is reduced, it's easier for the price to go up. Here's a question for you, Jason. What's your max bench?
300 pounds.
So when you bench 150, does that feel only half as light to you?
No.
What does it feel? Does it feel heavier than half its light?
I can tell you it feels very light.
Isn't
And
that weird?
it's very weird,
It's only half as light.
but it feels very light.
Oh, that's what I think happens with price. Exactly that relationship. I can't explain it.
Yeah.
I just know it's true.
Yep. Yep.
That's it. To me, that's what stock to flow is. Just that. So if you can explain that to me, Jason, you can explain stock to flow. I can't explain it. I can only observe it.
Yeah.
And that's it. And I don't think there's any more really to discuss than that. And I wish I had a better explanation. I wish I could give you a lot of math proofs. I think that little by little, people come to understand what Bitcoin is. They want to own it. Those people who understand it best become hodlers. I call them the network of hodlers. They know they want to own it. But a lot of people don't really understand it. They trade it like lunatics. They trade it with 100% leverage, 100 times leverage, which I think is completely crazy. And they do all sorts of insane things with it.
Yep.
But that network of hodlers gives its value. And I think that price outs itself over the course of a cycle amongst a lot of trading noise. And I think that's what confuses people. And I think they find looking at all this trading noise is terribly confusing. But I do think there's signal in there. And I think what Planb's mathematical model is giving us, and the understanding he has given us, is that he's teasing out that data, which is finding that cluster of pricing that the network of hodlers are giving to Bitcoin in the course of a cycle. And then when there's less reward in the process of the coming cycle, of the next cycle, price lifts because it's just easier for Bitcoin to push up that flow, which is half as much as the prior flow was, just like Jason lifting 150 versus 300 pounds. And what we have to remember about Bitcoin is that issuance is every 10 minutes on average. So it's not like it went from issuing 600,000 some odd Bitcoin to 300,000 some odd Bitcoin instantly. The issuance isn't all at once. It's every 10 minutes. So that's 10 minutes times 6 for an hour times 24 times 365. So little by little, it takes its toll. So the other mental analogy I have is sort of the inverse of the straw that breaks the camel's back. Mm-hmm. So I don't know. I'm sure there's a mathematical way of figuring out when that added weight will cause the thing holding it to collapse. But I'm not sure that we can figure that out in the pricing of Bitcoin in the trading ecosystem that exists out there. It just takes its toll over time. And
you know,
again,
Tina, one of the things that you said, which, you know, I wanted to explore was, you know, my analysis of Bitcoin goes back, you know, half a decade. My first experience with it goes back all the way to 2011. And I've been aggregating data points to make general assumptions, and then to convince myself of things, and then to convince others of things. And part of my daily job is raising capital and managing people's money. And these data points are part of my calculus, are ways that I visually convey messages or feelings or intuitions or framing my own decision making. And the stock to flow model, I was introduced to it even before co-integration was introduced to it. And co-integration, when it was applied to the stock to flow model, was something really interesting. So interesting that even Planb thought it was interesting. And the person who provided the statistical work and applied co-integration to it was some other guy.
Yeah, one of the critics of it now.
That's right.
the guy who did it actually is now critiquing it.
Right.
He said, it's not there. I said it was there, and it looks like I screwed this up, and I made a mistake on it.
That's right.
Let's not pick on him too much. I think maybe some statistics professor first said, "Oh, this doesn't look like it exists here," and then the guy kind of backed up, "Oh, it's not here."
Right, right. But
regardless.
So the only reason that I'm so keyed on it now, I don't think it's from me being naive. It's
No,
by me
I
saying,
use those words harshly.
it's okay. It's okay. But I think it comes from me saying, this is a model, one data point in the calculus of all the things that I'm using to form my own opinion. And the author and those, the author had accepted an application of a statistical model that is very relevant in that world, a world that I don't even pretend to understand. But this co-integration model is a Nobel Prize winning statistical model that, when applied to stock to flow, in my tiny mind, hardened it for some reason, to which I can't understand or even explain to you. But it just felt better. And so that's why when Planb said, oh, or the guy said, oh, you know what, we've disproven it, doesn't work, doesn't hold up. It doesn't invalidate stock to flow. Because I use it both going forward and going backward. And to your point, those who try to predict price end up eating round glass. It's stupid. It's really a stupid exercise. But technical analysts try to find trends and which way is the diagonal going in this circle and this convergence and what have you. It's interesting to talk about, and you can talk about it infinitum.
I think that there are clustering cycles of price. I saw another critique. Let's veer off on a tangent and come back to that. Remind me to come back to this. Somebody was criticizing stock to flow, and I think they were looking at gold's data points, maybe over many years. I didn't look that carefully at their scatter plot, and there seemed to be no relationship whatsoever. And I think that's a misunderstanding of what stock to flow is. So here's how I think of stock to flow, and it may not be correct. It's just how I think of it. Mm-hmm. I think of stock to flow as that relationship of what the flow is in a particular year, according to a particular, that snapshot. But if we were to take gold in 2020, and then again in 1979, 1989, 1999, various years, it doesn't mean that you're going to get a linear relationship in those time frames, because stock to flow is valuing that monetary like asset at a given moment in time. So if tomorrow the Fed got religion, raise rates to 10%, cut back the money supply, plunge the economy into a global depression of 70% unemployment, stock market would have crashed to $300 on the Dow. Bitcoin's not going to $100,000. It exists in a given moment in time with a given set of circumstances. On the other hand, if in the next couple of years explode the balance sheet to $100 trillion and they pass out UBI so that every family gets $100,000, Bitcoin might be going to $4 trillion a Bitcoin.
Interesting. Now that actually flies in the face of a lot of, I would say, Bitcoin maximalist feelings that this is a chaos hedge. Like Bitcoin only goes up if the world burns down.
Well, I think that's completely wrong. I think Bitcoin goes up no matter what because of its qualities. Bitcoin to me is about.
Planb has said some of the things that you're saying right now, like the S&P at 4,000 relates to a Bitcoin price of 160,000.
I would agree with Planb in that. I think Bitcoin is not a chaos hedge. I think that is
interesting.
A pretty stupid way of looking at it. I would disagree with it pretty harshly. Mm-hmm. I think Bitcoin is actually about a new economic paradigm, about a paradigm of using money that's non-inflationary and actually deflationary. I think of it like this. Here may be a better example. I actually had this mental model the other day, and I think this explains it maybe relatively well. An economy is about allocation of resources, allocation of scarce resources within that economy. That's basically what economics is, the study of the allocation of scarce resources in a given economy. Money is the means of transmission of those prices. So the more accurate the pricing is in that economy, the better the allocation of those resources will. This is not talking about whether something's fair or not fair, whether or not they're distributed, more to some people than to others. That's not what we're talking about here. It's just talking about the efficient allocation of resources. And so if the pricing is not good, it's not going to communicate well to the participants in the economy. And the easiest mental model I can think of that is, have you ever driven a boat?
Yes.
How quickly can you turn? Can you turn on a dime in a boat?
Unless you're going fast, no.
Even if you're going fast?
Not really.
In a car, can you turn on a dime in a car?
Again, if you're going
well,
fast.
yeah, but maybe not at 190 miles an hour. But if you're driving 30 miles an hour, can you turn on a dime in a car? Pretty much.
Yeah.
You can turn pretty fast, much faster than you can. It's the relative comparison. It's one versus the other. How does a car's turning compare to a boat's turning? Let's. How about if I phrase it like that?
Far better. The car turns far better.
Would you want to drive on the roads with steering which was like a boat's steering?
No.
Why not? Why not?
Too much margin for error.
You'd crash.
You're crashing all over the place.
You'd crash all the time. That's what bad money does. You're crashing all the time because you're not transmitting the information properly in the economy. And that's what money is doing on pricing. It's giving an accurate transmission of that information from the driver to the wheels.
Yeah.
That's not perfect. I'm sure there are plenty of problems with that analogy, but that's how you think about money and prices. Think of prices as being the wheels and think of money as being that mechanism of transmitting the information from the driver to the wheels. So that's the problem with a money which is constantly being inflated.
Got it. Tina.
Does that make any sense?
Totally. Tina, is Bitcoin really the only money in existence?
Well, we don't use money. We use credit. We use currency.
But I'm saying, like right now, Bitcoin.
I think gold was a failed money.
Right.
I think there were a lot of problems with it. Gold requires a trusted third party. Bitcoin isn't money. Bitcoin is a good which is used as money.
Okay. And that's different than a commodity used as money?
No, you could call a commodity a good used as money. I mean, it's still a good. A commodity's a good. Mm-hmm. But it's not, to a certain extent, and maybe this is what pomp may mean. It's not that it's an illusion. It's just that we use something as money. It's not. It has characteristics of money.
Right.
A good that has characteristics of money. Moneyness.
I watched a documentary on YouTube recently that took us back 2,000 or so years and talked about, the Roman solidus, and talked about when seashells were used as money and how those were exploited and essentially found to be worthless. And it really these historical journeys that you go through to better define your understanding of how do you derive value? How does someone else derive something of value? How do you use something as a unit of exchange? And that essentially becomes valuable and recognizable, and people have faith in it for some reason, that whether it's scarcity or what have you, it really starts to build, I think, a more thoughtful a thoughtful understanding of what we're dealing with right now. And I really appreciate Bitcoin is taking people on this journey. They're questioning things that they had never questioned before, truly cowed. Like I'm, managing other people's money now, and I've thought lightly about some of these concepts, but I can tell you I've spent far more time trying to figure out how a mitochondria works or cellular respiration or how the body works. I have not spent this time on how money works and how transactions work and how the Fed works. Who owns the Fed?
Well, the funniest thing about money is, in some senses, it's like a simple machine. We use wheels every day. We use levers. We use pulleys. We use lots of simple machines. We never think about them. Money is so simple, we don't think about it. We don't think about what it is. We don't think about what makes money. We actually don't use money on our side. We're using currency, and that's credit-based.
Yeah.
We don't use money. We call it money, but it's not money.
Right. They're essentially notes with leverage on them that someone's buying and selling.
They're credit. They're a form of credit.
Yep.
They're issued against an issuer, and their credit. I had a guy beat me up about that the other day. But he's right. I agree with him. I like him. You can learn a lot. His name is Manuel Poleva. I can't pronounce it properly. He's written some pieces in Medium, and they're well worth taking a read on. He's a very smart guy. I don't know what he thinks about stock flow. He may like it. He may think it's crap. Mm-hmm. And I like him, but I don't care what he thinks about it. I know what I think about it, and I know I think it's meaningful. He may dissuade me, but I doubt that.
Tina, one of the things I love about you is that you've got a tremendous education, to which I know very little about. I'm assuming that you've been highly educated, but you think and you explore and you change your mind.
I do. Well, I like what Keynes said. I'll try to remember the quote exactly. I can't recall it exactly. It says, "When the facts change, my opinions change. What do you do, sir?" No, I try to think, and thinking is really important. And, I knew a guy. Let's see if I can remember this quote. It's actually a great quote. He took it from somebody. In a second.
Yeah, no worries.
John Patrick was the guy's name. That's not my friend who used to love to say this. He used to say, pain makes man think. Thought makes man wise. Wisdom makes life endurable. It's important to think. It's important to think for yourself. Most of us don't. Most of us listen to what other people have to say, and we take it as that. And you should never do that when it comes to your investments. You should try to best understand them. And I think one of the reasons why people trade as much as they do, and I know this was true of me because I traded for years. I didn't like the Fed, mostly, is why I traded. But a lot of the reasons a lot of people trade is they don't know what the hell they're trading. They're just hoping to pass something from themselves to somebody else. It's a form of greater fool theory. You're looking for somebody who's dumber than you, so you can sell to them at a better price. Sometimes it turns out you're the greater fool. Yep. For me, Bitcoin, because of its qualities, has certain values, and I think that people like to look at the end game in Bitcoin. They say, well, of course, this can't just keep going up infinitely. I also don't make a claim that Bitcoin will go up infinitely. I think that there will be some point at which it will go up according to the increase in global production, when it's used as pretty much the only money, as a winner-take-most money. I think maybe winner-take-all, but call it winner-take-most. That's good enough. So the world may produce X amount of new production every year, and that value will go into Bitcoin. So it will accrete in value. Interesting thing about Bitcoin is it's actually so much better than the system we're in, because in the system we're in, you can just rely on making interest off of your saved value, and that can hold your place. So you're a billionaire and you make your 1 or 2% or your 8% interest from BlockFi, and you just keep your place and you don't ever have to work again. Bitcoin won't create a world where you don't ever have to work again, because regardless of how much Bitcoin you own, you could be Satoshi and own 1 million Bitcoin. Now, it may be so much that you can never spend it. But eventually, your family will run out. So you will have to do one of two things to get more Bitcoin in the future in a Bitcoin-only world. You will have to invest it successfully. So you'll have to invest that money into something which will ultimately yield you more Bitcoin through dividends, in my opinion, or increased price of your investment when you sell it to somebody else, or by your labor. But you won't simply be able to take a whole bunch of money and put it into something and get a return on it and just maintain your position in society or your family's position in society for generations. You'll have to be productive.
Well, wait, Tina, won't you just become a bank?
Become what?
Wouldn't you just become a bank?
What do you mean by that?
Well, if I had 1 million Bitcoin and we've gone through a period of, let's call it a flattening of volatility, and Bitcoin's now $50 million of Bitcoin, $100 million of Bitcoin, and it's moving like Berkshire Hathaway Class A.
No, I have 3% a year.
Whatever, right? Something very small,
sure.
Right? So it's not like what we're dealing with now.
Mm-hmm.
Don't those who have those kind of war chests of Bitcoin become a bank?
Maybe, but what does a bank?
A bank does all the things.
What should a bank that's not getting bailed out by the government? So let's talk about a real bank. Let's not talk about the scammy system that we have now. Let's talk about actually, the way the real world's supposed to work. Yeah. So let's not talk about what people think of when they think of bank. What does a bank do?
A bank that gives mortgages or invests in local businesses or rehypothecates.
Well, I don't think you'll have interest in a Bitcoin only world. That's my particular opinion. I think.
Well, people are still trading, but Tina, people will still be trading their lives for Bitcoin.
Oh, absolutely. But I think
they'll still not make enough Bitcoin to manage their needs and wants. So they'll be likely to use credit.
No, I don't think they'll use credit. I don't think they'll use credit.
But maybe
there will be because those people will go bankrupt. I don't think there'll be credit in a Bitcoin only world.
All right. So that would make banking hard because
banking won't. I don't think banking as we know it will exist.
Yeah, because I would say that most of the things I was going to contemplate are about offering credit and notes.
I don't think that model will exist. I think that is a model which is natural to the legacy system that we're in. I don't think it's natural to a Bitcoin only world. I think there will be no debt and virtually no credit in a Bitcoin only world. That people who engaged in those activities will be financially destroyed by it, and it won't exist. They may learn very painful, expensive lessons as to why they don't, but I think Bitcoin's deflationary nature will destroy people engaging in that activity. I think this is a temporary phenomenon. Let me give you an example.
Well, let me give you
an example.
Hit me with it,
okay.
Then I'll challenge.
Okay, fine. So if you borrow $1 million today and you have to pay it back in 10 years, whatever the interest rate is, doesn't even matter. Will that $1 million be easier or harder to pay back in 10 years if you've built a moderately successful business? I'm not even talking about building a booming business, but just a moderately successful business. Easier. Will that $1 million be easier to pay back in 10 years or harder to pay back in 10 years in the world we live in today?
Well, depending on the interest rate, if you're able to pay your principal and interest, you've used leverage, in my opinion, fine. And if you've kept up with it, it should be fine for you to pay back.
No, you're sort of not answering the question. You're kind of evading it. So here's We live in a
Well,
world.
let me, then I'll say easy.
Wait,
I'll say easy.
I'll explain it. Let me explain it. And then maybe you'll see my point of view a little differently. We live in a world with monetary inflation. So for many businesses, if not most businesses, what will tend to happen is that prices will go up. And even if everything remained the same, so let's say you do, on the $1 million, you do $1 million in sales every year. And you earn $100,000 on those sales. So you have $900,000 in expenses every year. You earn $100,000.
Yep.
Okay. But we have monetary inflation. And so that grows. And so by the end of the 10 years, and I'm going to use extreme examples for the point of clarity. Now it's $10 million in sales and the margins remain the same. And you have $9 million in expenses, netting you $1 million in profits, same margin. Because of inflation, the debt's easier to pay back. For nothing else, not because your business got better, not because you ran your business better, but simply inflation made that loan easier to pay back because of inflation. Mm-hmm. It makes sense to borrow in this world. Now, let's look at it in a Bitcoin-only world. Oh, and by the way, that $10 million probably buys you less than the $10 million bought you, than $1 million bought you 10 years earlier. Yep. You know, the house that you could buy is now half a house. because or the stocks you could buy, whatever it is, because of monetary inflation, there were other, you saw an improvement in your sales, but your business didn't actually get better. You may not have taken more economic value out of the economy. In deflationary world, you start with that same house costs you 10 million Satoshis, or 10 million, pick a number, 100 Bitcoin.
Yep.
And you have 90 Bitcoin of expense, yielding you 10 Bitcoin in profit. And because of the deflationary nature of Bitcoin, it drops to 10 Bitcoin in revenue, 9 Bitcoin in expenses, and 1 Bitcoin of profit. But you borrowed in year 0 100 Bitcoin. How are you going to pay that? How are you going to pay that loan back?
Bitcoin's price has to go up.
No, you can't pay it back because you owe it in Bitcoin.
But okay, then
you owe Bitcoin back.
If
you got to pay back
Bitcoin, yeah, if it's one Bitcoin,
you got to pay back Bitcoin. How are you going to do that? You can't pay back loans in a deflationary world.
Unless, yeah, I mean, if 1 Bitcoin equals 1 Bitcoin.
1 Bitcoin always equals 1 Bitcoin, but you borrowed 100 Bitcoin.
Yeah, no, I get it.
You borrowed 100 Bitcoin. You owe 100 Bitcoin. You don't owe what Bitcoin value could buy in year 0. You owe 100 Bitcoin, except you have deflationary money. It turns out that 100 Bitcoin bought less in value than the 10 Bitcoin buys you in 10 years. Simple example. You could buy 100 televisions with your 100 Bitcoin. And with your 10 Bitcoin, you could now buy 200 televisions 10 years later. It actually buys you more, but you have less Bitcoin. You have greater value for that. Does that make any sense to you? Do you follow what I'm saying?
No, without a doubt. I just feel like we're missing something. If I borrowed 100 Bitcoin and then 10 years later, because of disinflation,
deflation, not deflation, not disinflation.
I owe 100 Bitcoin still.
Well, you borrowed 100 Bitcoin,
and
that's what you owe.
Right, and at 10 years later, I owe 100 Bitcoin.
You owe 100 Bitcoin.
My point is going to be: did the purchasing power of the Satoshi change at all over the?
Yeah, it went up a lot. Yes.
Well, then
it went up a lot.
Well,
but but you owe Bitcoin. You don't owe purchasing power.
But my point is, all along the way, I may have been Well, I'm going to be receiving less.
I'm trying to make the example very simple. It's
No,
not, you can try to squirm around it, but leave it as a very simple example. No, because the example is simple for the point of illustration.
I understand.
And so I'm trying to show you that in a deflationary monetary environment, you don't want to borrow. Now, I think you'll invest. So how will you do it? You're going to buy shares instead. So you're going to make an investment. You're going to be a part owner. They're going to be a part owner in your business. They're going to give you a certain amount of Bitcoin for ownership in that business. And they'll have some percentage of ownership in your business, 10%, 20%, 50%, whatever it is you agree with those people on. And then you can use that capital as you need to, but you don't have to pay it back. You're going to start paying them a dividend, and someday they can sell that business for some amount of Bitcoin. Mm-hmm. I picked extreme examples. They're not necessarily realistic examples. The point was the point of illustration. The point is to illustrate how, with a deflationary money, interest and credit will be harder to exist. Debt won't naturally exist because the people who lend, I want a piece of your business. I don't want to give you a loan for your business. Where you get to ride on my capital. And that's what we live in today. You're riding on somebody else's capital. And this is a hard notion for people to accept. It's very bizarre because we live in a particular world. I heard a very smart guy disagree and said, well, you'll want to lever up your business with the debt. I just think that what will end up happening along the way is that people who engage in that activity will find themselves wrecked. And little by little, people say, I don't want to do that. So this is part of hyper-Bitcoinization. I don't know how long that takes to get there, but I think that's a natural conclusion, which is why I told you I don't like those models. And I don't think those models will be successful. Those models are skeuomorphic. They are taking the legacy system that we have and applying them to what Bitcoin will be. But I think Bitcoin has certain natural characteristics. And if you change Bitcoin's characteristics to be like the legacy system, then it won't be Bitcoin and it won't have any value. So if you tack on inflation into Bitcoin, it's no longer Bitcoin and it no longer has any value, which is why people will not accept that as a consensus change, because the people who use it and hold it know that's not okay. It'll fork off and you can have that crappy copy of Bitcoin that you think is Bitcoin, and I'll continue to use Bitcoin and mine will go up in value and yours won't. Mm-hmm. But I think there are natural consequences of what this means. And I don't know how to prove it to you. All I can do is take you through a thought experiment, which is how I see it. You'll agree with me or you won't agree with me. Right. But you have to understand what assumptions you're making about these things. And what I'm saying is that we live in a world, because of monetary inflation, the nature of debt is that debt becomes easier to pay off because of monetary inflation over time. And so debt is highly desirable. But I think in a world with a fixed money supply, which gives us a monetary deflation, your 100 million sats will buy you more in 10 years than it does today. And so that's like the price going. Now we're pricing in dollars, but you're not going to have dollars in that world. You're going to have goods and services and real estate. So you're,
and in a simple, the way you're describing this, the number of sats to buy goods and services will decrease.
You'll need fewer sats to buy the same thing. So if a pair of shoes, a beautiful pair of Ferragamo or Prada shoes, which today might be $600 or $700, costs you 600 sats in year 0 and costs you 150 sats in year 10. Same shoes.
Yes.
Just costs you less. I don't know what the example will be, but that's what's happening. Fewer sats will be necessary to purchase the same thing. So you might be able to buy 4 pair of shoes for the 600 sats. You get more bang for your buck. or more bang for your sat.
Yep. Yep.
And so I think there are natural consequences of what this is. And I think it will create a very different, I think it will create a world with far more productive companies than a world where capital is priced artificially cheaply. I think it doesn't mean the economics does not come out over the course of a cycle. In today's world, I think it does. I think it comes out in the form of a bust. So plenty of businesses where the capital looks artificially cheap because of the way our capital markets work, because the way the Fed peg works, it results in a bust, which causes those assets to degrade. What's worse is we actually come in, we'll bail everything out, so we actually never even let the markets properly clear. So we just build up the problems and build up the problems that become worse and worse until we wind up with a catastrophic failure. But I think Bitcoin will actually prevent that. I just think we'll lift into a Bitcoin system, and people who owned the best money will be sitting very pretty financially, and those who held on to the crappy monetary system will be sitting in a very poor situation. So it'll give you an opportunity to really better yourself financially than you might be today for a lot less money.
Tina, and I want to be a good steward of your time. I have one closing question for you, and this has to do with the speed of all this happening. You know, we've talked about this happening faster than what we could have contemplated, but I'm getting the feeling now that you're conveying a low time preference to me. Which is
I have a low time preference, but I think this happens shockingly fast. I think Bitcoin will be the one and only money in 14 to 29 years. I think the entire world will be using it. I think I think Bitcoin's value 10 to 12 years out will be, in today's value, multiple millions of dollars in buying power. Not buying power then, buying power today.
Wow.
That one Bitcoin, 100 million sats will buy you the equivalent of a $3 to $5 million house today.
Yes.
Not 10 years from now. Not a not a monopoly not a monopoly little greenhouse board, but an actual beautiful home. I think that its value will increase staggeringly, because I think the more people come to understand it, the more they want to own it, and then I think there'll be literally a blind panic to buy.
Mm-hmm. We've talked about that, which is you've got some interesting feelings about lines around the block to get to Bitcoin ATMs and just to get access to it.
I just think people will come, little by little, they come to understand it. There's some percentage of people who understand it best who will want to hold it. They will hold it through thick and thin. Some of them may trade it a little bit better.
Tina, one of the things, I know you're a fan of Chris at Bitcoin Magazine. I too like talking to.
Who's Chris?
CK at Bitcoin Magazine.
Christian, right. Chris. Okay, I call him Christian. I don't call him Chris. Yeah, I love it.
But
I think I'm a CK.
Yeah, one of the things that we talked about, which I really liked exploring with him. Gosh, let me see how I frame this, or how I've lost my train of thought with it.
Sorry.
No, it's okay. Maybe it'll come back to me. This whole just give me a second, because it was a really interesting concept, and I know you'll appreciate it. Oh my God, I don't know how it flew out of my mind. Anyway, maybe.
No. Give it a shot. Give it a shot.
Let's see if it'll come back to me. Yeah. What were we just discussing before I called him Chris?
How fast this is going to happen?
Right. Hyper Bitcoinization.
And I think it happens incredibly fast.
Yeah.
Because when we see it with technology, so we've seen how fast Facebook got adopted. We see how fast these various technologies get adopted. But the difference between, buying cell phones and then smartphones and laptop computers, and I've watched this whole process of technology adoption go on. And Bitcoin, I think, is an exponential technology. But I think not only is it an exponential technology, but it also has price attached to it. So you can make money by holding it. So it's not just that it's easy to do because of the way it's software. So, anybody can easily buy it and then easily store it because you're just working with, you're just working with data and software. So it has that easy way to spread throughout society, the way using a software program is easy to spread throughout society. But on top of that, because you buy it and you can hold it and watch it appreciate, that supercharges that spread of the technology in a way that we've never actually seen with what we're using as tech, the internet and computers. All of these things have taken time to adopt. So I started using the internet by using AOL, which wasn't really the internet. I forget how if I used the internet at all. I certainly used it when I had Netscape, which was around 95, I think. I don't remember exactly what I did. I might have had another Explorer. I don't recall. I don't recall exactly what I used, but I tend to be an early adopter to all these things, and so was active. But maybe I was just using AOL, but I don't fully recall. And but if you could own shares of the internet, well, you can with Bitcoin, I think all of this process would have happened even faster. Mm-hmm. And so I just think that humans are so driven by the desire to make money. We love to make money. Everybody loves to be better off financially. And I think that aspect of human greed will cause Bitcoin to move very, very rapidly. And I think its qualities are vastly superior to anything else that we use as money.
I just remembered. One of the things that we both share as kind of a gateway or an entryway into Bitcoin are altcoins. And, I found Ethereum, which brought me to mining, which brought me to Bitcoin. And I know Christian, he's got a sidekick on his show that is a big Ethereum guy, and the two of them play off each other. And what I see happening today is this pump and dump of Dogecoin through TikTok, which has, I don't know, some amazing amount of subscribers. It's like the biggest social media platform in the history of social media platforms. And then we have Robinhood, which there are like 800 million users. And on Robinhood, people are speculating Dogecoin. And it's gone viral. I wonder if that is the gateway drug or the entry point to Bitcoin. And will that be a little catalyst to Gen Z, Gen X, the bros who are trading on Robinhood right now, to an accelerant in adoption, information, learning, all the things that we know you have to go through, custody, everything to learn and be introduced to Bitcoin?
Probably yes, but bear in mind what I said to you before about greater fool theory, investing and trading.
Yep.
And so for many people, it may temporarily leave a bad taste in their mouth because they lose a lot of money because they do something stupid.
With Dogecoin.
Yeah.
Yep, I get it.
Many years ago, I would get online and tell people that they shouldn't buy these various crappy stocks because they basically had no value. Nobody wanted to listen to me. People don't listen to you when you tell them that they shouldn't buy certain things because they think they know better.
Yep.
That happens all the time with investing and trading. So for some people, it will ultimately be an initial gateway. For others, they won't get into it till later on because they'll be financially hurt by the experience. But even though those crappy stocks existed and people lost money in them, people are still investing in the stock market, and people will still ultimately buy Bitcoin. I think ultimately we're seeing more and more on-ramps into Bitcoin. I did not enter through altcoins. I bought Bitcoin initially. I did buy some altcoins. I did own some altcoins. I sold them all. I had no more than 10%. I was not an early Ethereum. In fact, people talk about Ethereum. If I put my money into Ethereum, I'd be at a net loss right now because Ethereum was probably
almost $1,000.
Well, no, when I bought it $300 or $400, so I'd still be at a loss.
Yeah.
Net on average because of DCAing.
You got involved in like 17.
Yeah, late 17.
Late 17.
In almost the fourth quarter, I think. I'd be underwater in Ethereum. Had I owned mostly Ethereum, but I don't think Ethereum has the qualities to be a good money. I'm not here to bash Ethereum. I personally have no interest in owning it. I'm not going to own it. I don't care. I'm not interested in trading altcoins. There's not a single altcoin I want to own. For me, the only reason people buy altcoins is they don't understand what they're doing. Can you trade it and make more money? Maybe you can. I doubt most will. I think most will probably lose more money, will net lose the net amount of Bitcoin that they could have made. I think for most people, if you look back, going back to the earliest days in Bitcoin, that the smartest thing to have done was simply to buy it and hold on to as much as you can, to not trade it, to accumulate through your work, to not try to trade and advance yourself that way. If you were to trade, what you should have done is only traded a fraction of your size if you felt necessary to engage in some kind of swing trading. Probably the better thing to do is to look to trade maybe some amount over a longer term cycle. So maybe if you could have bought it at $1,000 or $2,000 in 2017, having sold a portion of it at $15,000, you wouldn't even have to have sold all of it to make all your money back. Maybe you just sold 10%. But I think that trading is, and the same is true with stocks, trading is very, very hard. And it looks very easy. It looks deceptively easy. Trading is one of the most difficult things there is to do because you're trading against other people who are knowledgeable.
Or algorithms that are ruthless.
Yeah, well, absolutely. I'm not talking about trading necessarily over the course of seconds and minutes. I'm talking about trading, trading over the course of weeks or months. I'm not talking about just going in and out instantly. Going in and out instantly is complete idiocy. Probably it's better to try to get an understanding of what it is that you are buying and look for things that have long-lasting reasons to buy it. They have great barriers to entry. I think that what Bitcoin is its characteristics make it the apex predator of all monies.
I love it.
It's the best money. It's the best good that we've ever created to be used as money.
Incredible.
For history. And I think that people who've made good economic decisions will show much more economic value for having made those decisions. And that will be owning and not trading Bitcoin, at least not trading it day to day, week to week. That doesn't mean that if you buy some today and the price is in the 9,000 range, if 2 years from now it's at $200,000 and you sell 10 or 15%, that might or might not be a smart thing to do. I also think, unlike many people, and I get critiques for this, I think that the way it has traded may not be the way that it does trade in the coming decade. People think they know how Bitcoin trades. They think Bitcoin goes up in these massive bull markets and then crashes 70, 80, 90%. I think there's a very decent chance that it doesn't crash to that extent because it's much more actively sought by most of the world. And so that people...
Tina, it's already behaved more stable.
No, I'm not saying it's going to be stable. It's going to be, I think it will be much more volatile.
Less volatile. Excuse me, less volatile.
I don't think it will be less volatile. I think it will be
upside.
I think it'll be volatile. I think it'll be more volatile to the upside. I expect more explosive up moves and less crashes.
Well, that's a really tough place to trade.
Yeah, it is. And it's going to wreck traders. And that's one of my controversial views. It's going to wreck traders.
That's a real...
You're going to think you sold it well, and it's going to wind up much higher than where you sold it. And you'll never be able to afford to buy it back because it's not going to crash 80 or 90%. Yeah. Maybe it'll only go down 30 or 40%.
Interesting.
And you won't be, if you live in the United States and you owe your taxes, you'll pretty much never be able to buy it back. You won't buy back as much. So if I'm right about this, let's say you live in a state with a 20% capital gains rate, and then there are many states with 5 or 8 or 10% state tax. So you might have a net 28% rate, 30% rate with capital gains, long-term capital gains. So if Bitcoin goes up a lot but only crashes 40%, when should you have sold it? What's the answer to that?
I mean, that's the tax scenario that you said. I mean, should I have sold it around 20% down?
No, you should never have sold it. You never have sold it because the odds of you're getting that top price and then buying at that best bottom price are nearly non-existent.
Right.
And so you're just going to be, in the best case scenario, be trading dollars. You'll be making the gain, paying the taxes, and then buying back the same Bitcoin. And you'll be no better off for it.
Right.
Except you might be worse off because your timing will have been bad.
Yep.
And I tell people this, and they tell me, "Yeah, it can't possibly be like that." They tell me it can't possibly be like that. I know that there's a really good chance it could be like that.
Yep.
People don't imagine a world. People have such a hard time imagining a world which is different from the one they know. And I constantly try to think about what if the world looked different. I'm constantly thinking about that. And I think that if you understand Bitcoin, Bitcoin is going to change the way many of the things work. And it's going to change how things work, which is why I think Bitcoin is part of an emerging economic paradigm.
Incredible. Listen,
that's my view. I don't know. That's
Tina. In closing, I know you're a tech guy, and I just wanted to share something with you. I don't know if you have the iWatch, the Apple Watch.
I do not yet.
Well, consider this, because I waited on the Apple Watch, and I'm wearing this Aura ring. It's OURA, and it has all of the biometric things that the Apple Watch does, but better. It's got respiratory rate, pulse, resting heart rate, sleep biometrics, and temperature. And I'm enrolled in a study with University of Southern California, or San Francisco, excuse me. And it's for COVID testing, and essentially trying to do predictive modeling of because I still go into the hospital and do things in healthcare. Sure. But I've found it to be easy to wear. It's got a 7-day battery, and I still like to wear a watch. So it's water resistant, waterproof down to 200 feet or something like that. So you're a tech guy. I just wanted to say I've had a really good experience with it, and I'm not an investor. I don't make any money on it. I just like to share cool things with my friends.
Well, I appreciate that.
So check it out. Even if just for the sleep stuff, I've found that I get like 15 minutes of deep sleep a night, which is shocking. I would think I slept better than that. So I'm really,
I sleep like a baby.
Well, wait till you get some.
No, I sleep like a baby.
I mean, but wait till you see the face.
No. Let me tell you how I sleep like a baby. I sleep like a baby. I get up every hour and I cry.
Oh, you're crazy, Tina. All right, I'm going to leave it at that. My friend, BitcoinTina. Check him
Thanks,
out
Jason.
on Twitter. Always enjoy it. Thanks for the chat today.
Take care.
Bye-bye.